Very good morning, my dear friends. We are in the chapter internal reconstruction. In last session, we are almost at the end of problem number 3. I think so due to lack of time, in that hurry-burry mode, we are not yet finalized the figures of balance sheet. So let us have a quick look about the balance sheet and then we'll go for the further issues. No recap, nothing. Because the chapter internal reconstruction itself is a very small chapter, not that much of a big lines we have like amalgamation. So a typical internal reconstruction, what happened, I already conveyed. There is no liquidation and the same company is going to continue their business activities and it should need to take the approval from the NCLT. So in generally, revaluation of assets, reassessment of liabilities are going to occur, and various compounding activities also we should need to do, like negotiations with creditors, debenture holders, bank loan holders, and the reduction of capital. So many things we've seen. So the typical internal reconstruction means alteration of share capital, variation in shareholders' rights, and a reduction of capital, and then compromise and arrangement and surrender of shares concepts we are going to discuss, out of which we already seen the 4 concepts except the surrender of shares. Am I right? So in case of alteration of share capital, subdivision may happen, consolidation may also happen, and increase in authorized share capital also will happen. In case of variation in shareholders' rights, there may be variation with respect to dividend right or variation with respect to voting right. Anything may happen. In case of reduction in paid up capital, so reduction happen total in 3 ways. That is, if partly paid up equity shares are there, through conversion of partly paid up equity shares into fully paid up. Simply, we are losing uncalled capital or unpaid up capital. We are losing that right. That is the first choice. And the second choice, the company is willing to pay certain amount due to which their existing shares will become less than the existing face value. I mean, simply if it is 10 rupees face value is there, if company is willing to pay 3 rupees, then it will become 7 rupees per share. And the third choice, shareholder is ready to sacrifice certain amount. The same thing is happened, but we are not paying any amount. For example, 10 rupees share is there. If the shareholder sacrificed to the extent of 3 rupees, then the paid up value will become 7 rupees. Here actually 2 ways of conducting the accounting treatment is possible. I mean, one is there is change in face value, sir, as well as paid up value. So 10 rupees face value, change it to 7 rupees, and paid up value will also change it to 7 rupees. The second choice, there is only reduction in paid up value, but not in face value. Sir, for both the ways, what will be the accounting treatment? Equity share capital to reconstruction 3-3. When, sir, there is only reduction in paid up value, but not in face value. There is reduction in paid up value as well as face value means equity share capital. First, you should need to cancel 10 rupees face value to new equity share capital, which is 7 rupees face value. Remaining, you should need to transfer to reconstruction. Like that, we've seen something, right? And major issues, we also discussed things related to compromise and arrangement. Sir, both in case of compromise and arrangement, it is completely based upon the agreement entered in between company and the outside party, or as like inside party. They may be the stakeholders of the company, that is shareholder or the creditor or the debenture holder or the loan holder, supplier or anyone. Now what ultimately they will do, they will forego certain amount based on the situation of the company. Now the accounting treatment also we seen to the extent of sacrifice made by such party, we should need to simply transfer to reconstruction account. And we also seen gross sacrifice, net sacrifice concept as well. I mean to say, so the particular party is ready to forego something, but as a result, he is expecting some more. For example, debenture holders ready to sacrifice 5 lakhs, but in return, they are expecting that to the extent of 2.5 lakh worth of equity shares, or simply 2 lakh worth of equity shares. Then what is the real sacrifice? Real sacrifice is 3 lakhs only. To the extent only, you should need to transfer to reconstruction. Then debentures account debtor to reconstruction 3 lakhs to equity share capital 2 lakhs. Like that, you should need to write. So one more concept that is important concept we also seen, that is arrears of preference dividend. If you really remember, so if the arrears of preference dividend, we can take it as an unrecorded liability. If the unrecorded liability is sacrificed with other party, no entry. For such unrecorded liability, if you are discharging any amount in the form of preference shares, equity shares, or cash, simply the entry is reconstruction to cash. So upward revaluation, downward revaluation of assets and liabilities, that is easy concept. Whenever there is upward revaluation of asset to reconstruction, downward revaluation, reconstruction to asset. If it is related to liability, upward revaluation, reconstruction to liability, downward revaluation, liability to reconstruction. That is the base concept. So after completion of the entire internal reconstruction process, what we are doing in generally, we should need to find out the balance under reconstruction account. It should need to useful to nullify the P&L account balance, whether such fact is mentioned in the problem or not. After nullifying the P&L, you should need to check any unrepresented intangible assets and other assets exist. As per the information given in the problem, we should need to set off such values as well. Still we have any balance exist. Still we have any balance under reconstruction. Such balance we should need to transfer to capital reserve. After completion of internal reconstruction, we are adding the word unreduced. We are going to present the balance sheet. That is the typical internal reconstruction process. Am I right? Now, let me take directly problem number 3. I don't want to discuss anything because everything I discussed except balance sheet. Balance sheet we already done with the share capital. Reserves and surplus was nil. Long-term borrowings came 3,85,000. Current liabilities, short-term borrowing 1,95,000, trade payable 3 lakhs. All these values we already worked out in the last class. I don't want to repeat it. If I want to go for repetition, then I should need to read the entire problem once again. That's why I don't want to check that. Just make it totals. At that point of time, we didn't provide any totals. 5,64,000 plus 3,85,000 plus 1,95,000 plus 3 lakhs. 14,44,000 I got. So before proceeding with that, let me check here as well. Just a second. Yeah. Sir, share capital, absolutely we got the correct figure as like my written notes. Long-term borrowings 3,85,000, that's also correct. Sir, current liabilities, we have two different components. One is short-term borrowing, we have 1,95,000, trade payables 3 lakhs. What is this short-term borrowing 1,95,000? Why we got? Let me open the problem. This is the liability, right? Now, under the liabilities, so bank OD is 1,95,000, trade payables is 3 lakhs, director's loan is at 1 lakh. Director's loan, if you observe, we already entirely discharged. Something sacrificed, some part we discharged. Trade payables, we not yet touched. The same thing we are putting under current liabilities. That's okay. Bank OD is 1,95,000. Sir, if nothing is given, then we are putting under short-term borrowings only. That's fine, absolutely. For the time being, you can put it under short-term borrowings only. But the thing is, while working for cash and cash equivalents, we should need to consider this bank OD balance as well. For example, if you are end up with the negative balance, then you are changing the short-term borrowing. That negative figure you should need to put under short-term borrowing. No, sir. After considering this bank OD, if you are end up with the positive balance, then you should need to knock off this bank OD. Then you should need to put it under cash and cash equivalents. That is the point actually I want to convey at the day, but due to lack of time, I didn't mention anything. Now, first, what we can do, sir, then, before working about the totals also, let us do one thing, first of all. Let us calculate the total cash availability with the organization. So you can start with the balance as per bank OD. All of you, please start with your calculator, minus 1,95,000. This is the opening balance. Bank OD means minus. Next, come for journal entries. Now, the first entry, there is no involvement of cash. Second, also no involvement of cash. In this entry, fifth entry, so cash outlay is there. That is minus 22,500. If you observe 1,30,000, you can add plus 1,30,000. Now again, another inflow is there, which is 1,40,000. You can add plus 1,40,000. Fine, come down. Director's loan. Here cash outflow is there for 5,000. You can reduce the 5,000. Okay, come down. Reconstruction to bank. Another outflow is there minus 12,500. Nothing else. Guys, I end up with 35,000 cash balance, guys. I have end up with 35,000 cash balance. That is positive cash balance. Sir, if it is the positive cash balance, then there is a no place for short-term borrowing. So the net only we having positive cash and cash equivalents, which is 35,000. Now you can work out the total of assets and liabilities clearly, guys. Then don't consider the bank OD. We already started with the bank OD only. If at all we are having the negative balance, then I would show the bank OD closing balance under the short-term borrowings. But right now I end up with the positive cash balance. I was parked into cash and cash equivalents. Now please let me know the total of liabilities. 5,64,000 plus 3,85,000 plus 3 lakhs. Now I got 12,49,000 here. Here you can verify 4,37,500 plus 4,16,500 plus 3,60,000 plus 35,000. This side also 12,49,000. You can verify, guys. Both sides now it's tallied absolutely. Any doubt? Let me check the query box quickly. Guys, it's tallied, correct? Right now you are with me? At least one person. Tell me, yaar. Sir, cash balance, all of you getting the same figure as like me, 35,000 only? Yes. Fine. All are with me. Super. Mr. Sharan Krishnan. Sir, I have sent the doubts in amalgamation by email, sir. Okay, ma. I'll check it and I'll get back to you. Fine. One more thing. In today's class, if time permits for me, just I want to give a mind map for both the chapters, amalgamation as well as internal reconstruction. What is the meaning of mind map, sir? Because the chapters are pretty much vast. So the provisions are much more. I know it is too difficult task to summarize the entire things and to recollect the entire things at very small point of time or at very less point of time. So then what you can do from your end, I will provide a small mind map charts for summarize the entire things before going for exams. If you just to make it summarize such things, then automatically you can restore such points in your mind. While resolving the problems, you can simply apply. So that is the concept behind the developing the mind maps. I'll check. Let me check the time. Accordingly, I'll proceed. Okay. Come to the next problem, guys. Problem number 4. All of you, please concentrate. Problem number 4. Given below is summarized balance sheet of Rebuilt Limited as on 31st March 2011. So the name itself is given Rebuilt. To assets, cost less depreciation is at 4 lakhs. Plant at cost less depreciation was given. Trademarks and goodwill, which is intangible assets. Inventory given, that is stock. Trade receivables, which is nothing but debtors. Profit and loss account was given, which is loss-making company. Always in case of internal reconstruction, maximum stages, all the entities are suffering from huge losses. Then only company may go for internal reconstruction. Next, come here, authorized share capital. So 7% is preference shares of 50 rupees each. Note preference dividend is in arrears for 5 years. Okay, let us see things related to preference dividend, whether it was settled or whether the preference arrears of preference dividend sacrificed by the preference shareholders, what happened, we will see in the additional information. 15,000 equity shares of rupees 50 each. If you observe preference shares face value 50, equity share face value also 50. Fine. Next, loan given, trade payable, other liabilities. These about other liabilities. Then come to Further information. The company is now earning profits short of working capital. Okay. Now the company can able to earn the profits. That is the meaning. But short of working capital and a scheme of reconstruction has been approved by both the classes of shareholders. A summary of the scheme is as follows. So always after designing the scheme, whether it is given or not, court approval is mandatory. Okay. So impliedly you can just understand that court approval was also received by the company. The equity shareholders have agreed that their rupees 50 shares should be reduced to 2.5 by cancellation of 47.50 per share. They have also agreed to subscribe for 3 new equity shares of rupees 2.50 each for each equity share held. First, out of the 50 rupees face value, they are agreed to sacrifice to the extent of 47.5, due to which the share will become 2.50 each. Let me write the journal entry for that. First of all, problem number 4. What is the requirement? Let me read the requirement where it is given. Show journal entries how the financial books are affected by the scheme and prepare the balance sheet of the company after reconstruction. The nominal capital as reduced is to be increased to 6,50,000. Nominal means authorized share capital for preference and 7,50,000 for equity share capital. There is a increase in authorized share capital also occurred. Okay, fine. Now, one by one, let me check. So for the first instance, there is a sacrifice made by the shareholders here. Sir, I already told you in the theory itself, whether it is clearly mentioned or not, we can always presume that whenever there is a reduction of paid up capital occurred due to sacrifice made by the shareholders, then we should need to presume that there is a decrease in paid up value as well as face value. There is a decrease in paid up value as well as face value. That means here you can simply conclude that the new face value per each equity share is 2.50 each, and the new paid up value also 2.50 each. There is a decrease in paid up value as well as face value. That's why first of all you should need to cancel the existing face value, equity share capital account debtor. How much face value? 50. Existing capital how much? 15,000 into 50, which is 7,50,000. To equity share capital account, new face value 2.5. So 15,000 shares into 2.5, how much it is? 37,500. Remaining you should need to transfer to reconstruction account. So 7,50,000 minus 37,500, reconstruction 7,12,500. Like this, you should need to pass the entry. Next, one more thing happened. They have also agreed to subscribe for 3 new equity shares. Existing number of shares are 15,000. Every one share, they are subscribing 3 shares. Then for 15,000 shares, they are going to subscribe 45,000 total shares. Okay. For 3 new equity shares of 2.50 each for each equity share held. Once each equity share converted into 2.50 each, what are all the further shares issued by the company should be in uniform mode. They are going to issue remaining all equity shares at the rate of 2.50 each in the future. Now, this is additional number of shares issued to augment their working capital. Further, the normal entry you should need to pass, that is bank account debtor to equity share capital account. Bank account debtor. That is simply in bracket how many number of equity shares? 15,000 into 3 into 2.5. How much? 45,000 into 2.5, which is 1,12,500. To equity share capital account. Combinations, no need to provide any narrations. No. Initially, I'm ignoring narration. So what is the narration I should need to provide at every time, sir? That is, in which situation you are providing the journal entry. For the same situation, just you are giving some synopsis. For example, in the first case, that is, while recording journal entry for the from 50 rupees to 2.50 each, there is a both reduction in face value as well as paid up value. Accordingly, your convenience, accordingly, your thought process, just to make it present. What is the meaning of narration? Narration means if a layman who is not having any knowledge on the accounting, at least if he can able to see that narration, he should need to understand the transaction. That is the concept behind the providing narration in any journal entry. Am I right? That's why don't by heart narration at any point of time, and don't ignore to write narration in the exams as well. Always you should need to provide, because whether you are aware such fact or not, ICAI is providing the valuation scheme in such a way that they are awarding marks on stepwise basis. Stepwise basis means, for example, if a problem contains 10 steps, let us assume, if it is 5 marks problem, they might award it for each step half mark. So like that, just they are designing the entire valuation scheme and the blueprint. So if you are ignoring a particular step, even though the answer is correct, the final solution is correct. If you are ignoring a particular working note, even though you are working within the solution itself, then you may lose the marks. So if you want to get the full marks, please make it present the solution in the in detail manner. What are all the requirements required? Just make it present. Do you understand, all of you? In earlier scenario, what happened, I will tell you. Even though for balance sheets, if you make it present, if you are unable to provide the totals also, they might award the full marks. But right now, if you are unable to provide the totals of balance sheets also, they are reducing certain marks. So no one can do anything right now, because in the valuationer hand also, nothing is there right now, because everything is completely structurized. If it is there as per my blueprint, I can able to provide. Otherwise, I will not awarded any marks. Still, if you have any doubts regarding the valuation and such schemes and such all things, you may get good videos in the YouTube as well, how the marks they are awarded, or might your seniors will get certain papers, or if you just make it Google, then such papers also automatically available. How the marks and valuation scheme, everything will happen, you can easily know. That also very important before going for the examinations. Okay, let me come back. Come to point number B. The preference shareholders have agreed to cancel the arrears of dividends. Sir, if preference shareholders have agreed to cancel the entire arrears of dividends, means they're ready to sacrifice, means no need to pass any entry. Unrecorded liability sacrificed, no need to pass any entry. We already know the reason. And to accept for each rupees 50 share, 4 new 5% preference shares of 10 each. That is 4 into 10, 40, plus 6 new equity shares of 2.5 each. 6 into 2.5, which is 15, right? For every 50 rupees per share, we are paying 40 plus 15, 55. Is it profitable situation to the company or loss making situation to the company? For every 50 rupees, the company is going to issue 50, the company is going to pay 55 rupees, means which is not a profitable situation, which is a loss situation. Yes, in internal reconstruction, anything might happen. Okay, the preference shareholders may not convincing, because they are ready to lose their dividends. They are ready to lose their almost 5 years dividend. That's why they're expecting much more of 5 rupees over their existing face value, over their existing paid up capital. Now, how to handle this situation, sir? Cancel the existing 7% preference share capital. Cancel existing 7% preference share capital. Face value 50. How much, guys? 12,000 shares are there. 12,000 into 50 equal to 6 lakhs. 1 second. Now we are issuing for every one preference share, 4 new preference shares we are issuing. So total we are having 12,000 preference shares. 12,000 into 4 means 48,000. That is 5% preference share capital. To 5% preference share capital. 12,000 into 4 into new preference share is 10 rupees each. How much? Which is 4,80,000. To equity share capital, we are also issuing equity shares. Now we are issuing 6 new equity shares for each one preference share. We are having 12,000 preference shares. We are issuing 5 multiplied with 2.5. 12,000 into 5 into 2.5, which we got 1,50,000. Now, if you make it total 4,80,000 plus 1,50,000, it is more than 6 lakhs. So what is this 30,000? Excess of 30,000, that is 5 rupees now. 5 rupees into 12,000, that is 4,80,000 plus 1,50,000. How much here? Oh, just a moment. 60,000 should need to come now, because we are paying excess of 5 rupees means then 12,000 into 5, it will be 60,000. Then why we got 30,000 only? Just a moment. Anywhere any mistake done? Do you understand my point, sir? Here for out of 50, we are paying 4 into 10, 40, 6 into 2.5, 15. 40 plus 15 means 55 we are paying. That means per share we are paying excess 5 rupees. That is 12,000 into 5 means we should need to get 60,000 na. Equity shares how much, guys? You have taken 5. This is 1,80,000, yeah? One second. 6, okay, got it. I understand. Just a moment. This is not the 5, 6. This is 6, 6. Okay, now I realized. Now let me know, please change it this accordingly. 12,000 into 6 into 2.5, which is 1,80,000. Okay, now I got 60,000. Sometimes it will happen, but if you go in the logical mode, you can easily find out the mistake what you done. So which is a reconstruction account. Okay, now the entry 7% preference share capital 50, that is total amount 6 lakhs. Reconstruction account 60,000. To 5% is preference share capital 4,80,000. To equity share capital 1,80,000. That's it. Next, come to the next point. Lenders to the company for 1,50,000 have agreed to convert their loan into share, and for this purpose they will be allotted 12,000 new preference shares of rupees 10 each and 12,000 new equity shares of rupees 2.5 each. 12,000 into 10, 1,20,000 plus 12,000 into 2.5, 30,000. So total 1,20,000 plus 30, it is equal to 1,50,000. Now lenders to the company means that is loan. Here loan is exist. So simply loan account debtor. Loan account debtor. 1,50,000 you should need to cancel to 12,000 new preference shares. So new preference share is 5%. To 5% is preference share capital. So just you can mention in bracket the face values as well. This is 10. We are issuing 12,000 shares. That means here it is 1,20,000 to equity share capital, which is 2.5. How many number of equity shares? 12,000. 12,000 into 2.5 means 30,000. Very simple entry. Come down. The directors have agreed to subscribe in cash for 40,000 new equity shares of 2.50 each, in addition to any shares to be subscribed by them under A above. Maybe some of the directors may act as a shareholder. Here some of the shareholders, not some of the shareholders, all the shareholders, just they subscribed certain shares. For every one equity share held, they subscribed 3 new equity shares. in addition to this, directors, who is also shareholder. If he is a director, he should need to subscribe certain additional shares for the cash for 40,000 new equity shares of rupees 2.50 each. Then what is the journal entry? Bank account at R2, equity share capital 1 lakh. 40,000 into 2.5 means 1 lakh only. So bank account at R2, equity share capital 2.5, that is 40,000 shares into 2.5, 1 lakh. That is all about point number D. Come for point number E. Of the cash received by the issue of new shares, 2 lakh is to be used to reduce the loan due by the company. Loan due by the company. So for certain loan, we issued equity and preference shares. And for the other portion, just we are paying 2 lakhs. Again, the entry is loan to bank. Loan to bank. How much loan you are repaying? 2 lakhs amount of loan you are repaying, right? Fine, come down. The equity share capital cancelled is to be applied to write off the debit balance in the profit and loss account. Whether it is mentioned or not, reconstruction account is used to write off P&L, to write off 35,000 from the value of the plant as well. Any balance remaining is to be used to write down the value of trademarks and goodwill. Okay. Now, before doing such all things, first what I should need to do, I should need to find out the balance in reconstruction account. All of you start with your calculator. In the first entry, how much balance is there under reconstruction? 7,12,500. Second, nothing. Third, minus 60,000 because reconstruction is on the debit side. Fourth, nothing is there. Fifth, nothing. Sixth, nothing. That means I have with me under balance under reconstruction 6,52,500, which is balance in reconstruction. Now, out of this 6,52,500, I should need to set off the P&L account debit balance to the extent of 4,51,000. 4,51,000 is P&L debit balance. And one more thing also they told, plant we should need to reduce to the extent of 35,000. 35,000 plant. So remaining you can utilize to set off the trademarks and goodwill. Am I right? Remaining balance is how much? 6,52,500 minus 4,51,000 minus 35,000. That is remaining for trademarks and goodwill. You can utilize 1,66,500. What is the book value of trademarks and goodwill? So book value is 3,18,000. But out of 3,18,000, you can able to set off 1,66,500 only. Now, reconstruction account debtor. $6,52,500 to P&L account 4,51,000 to plant 35,000 to trademarks and goodwill 1,66,500. There is no balance in reconstruction account after passing this entry. Even we are unable to set off the entire value of trademarks and goodwill as well. That's when we are unable to transfer any single rupee to capital reserve. Oh, this is 7th entry, sorry. Okay, I hope all the journal entries I passed. Then what we should need to do? We should need to prepare the balance sheet. All of you come to the balance sheet, guys. Friends, at the time of preparing the balance sheet, please all of you give your efforts. I almost passed n number of balance sheets. Actually, it is not my cup of tea. You should need to try to work out the balance sheet in any chapter, because once you know the adjustment, what you should need to do, it is your cup of tea only. So anyway, just for the time being, I'm preparing. For the next time onwards, whenever balance sheet coming, then I'll give it as a HW. So balance sheet of Rebuilt Limited. In bracket, Rebuilt Limited after reconstruction, simply. after internal reconstruction. Start with equity and liabilities. Shareholders fund. A, share capital. So actually, let us go for notes, guys. Let us present notes as well. Number one, authorized share capital. If you check at the end of the problem, it is clearly given that for equity shares 7,50,000. So 7,50,000 equity shares at the rate of 2.5 each. Am I right? No, this is not number of shares, guys. This is 7,50,000 amount. That means how many number of shares? 7,50,000 divided by 2.5. So total key is telling that 3 lakh equity shares. 3 lakh equity shares at the rate of 2.5 each. Then it will become 7 lakhs. This is related to equity share capital. Now in the problem total, how much worth of equity share capital we total work out? Let us see quickly. In entry number 1, 37,500. In the second entry, 1,12,500. Third still we have equity share capital for 1,80,000. Fourth we have 30,000. Fifth we have 1 lakh. Sixth nothing. Seventh also nothing. Total I have 4,60,000 worth of equity shares. 4,60,000 is the paid up capital. Now come for the paid up capital. That is 1,84,000 equity shares at the rate of 2.5 each. How much? Which is 4,60,000. Actually, this is not form part of total. Just make it put here. That is related to authorized capital and paid up capital. One second. Actually, let me present the authorized share capital of preference as well. I forgot. Then make it total of the authorized capital. Then below that, we should need to present the paid up capital, right? So this is equity. Let me write the preference here. So preference, how he was given 6,50,000. That is 10 shares means 65,000 preference shares. 65,000, 5% preference shares at the rate of 10 each. That equal to 6,50,000. 7 plus 6,50,000, 13,50,000 is the total authorized capital. Now under the paid up capital, equity is over. Now you can work out for preference. Preference, again come here. First no preference, second also no preference, third 4,80,000 we have. Yes. Fourth I have 1,20,000. Fifth entry nothing, sixth entry nothing, seventh also nothing. So total we have 6 lakhs worth of preference shares. Now if it is 6 lakhs worth of preference shares, 60,000 preference shares, right? 60,000 preference, 5% preference shares at the rate of 10 rupees each, that equal to 6 lakhs. So 6 plus 4,60,000, 10,60,000. Like this, you should need to present into the notes to accounts. 10,60,000. Sir, is there any balance under reserves and surplus? Nil. Because the reconstruction balance is not sufficient to knock off the entire value of the goodwill and patents itself. That's why we not transferred any amount to capital reserve. So P&L account debit balance also vanished. Next, can come for non-current liabilities. Go up. Let me take the loan as a non-current liability, guys. Loan out of 5,73,000. That is A. Long-term borrowings under bracket. Just I'm mentioning it as a loan. Out of the loan of 5,73,000, if you observe, 1,50,000 you discharged by issuing preference and equity, and 2 lakhs you paid in the form of cash. So total 2 lakhs plus 1,50,000 means 3,50,000 you already paid. Out of 5,73,000, if you paid 3,50,000, what is the balance? 5,73,000 minus 3,50,000. Which is 2,23,000. Are you with me, guys? All of you? Can I proceed? Any capital I missed out? Some person, sir. Just a moment, just a moment. Director subscription also I considered, na? Just a second, ma. One doubt. Who is asking? Sir, director has subscribed for 16,000 shares of 2.5 each for 40,000 cash. Then how 1 lakh you taken? Those are amount, number of shares are. Just a second. The directors have agreed to subscribe in cash for 40,000. Oh, you are correct. I'm so sorry. I thought that which are 40,000 shares, which are not 40,000. Janesh, you are right here. The directors have agreed to subscribe in cash for 40,000, not 40,000 shares. Cash for 40,000. Just they subscribed only 40,000 amount of the shares. This is not 1 lakh. This is 40,000 amount of shares. Amount itself is 40,000. You are correct here. I'm so sorry. 40,000 means how many number of shares? 40,000 divided by 2.5, 16,000 shares. Accordingly, please all of you change the capital as well. How much excess I reported? 60,000 excess I reported. Just to make it present 10 lakhs. Okay, change this one as well, guys. This is not 4,60,000. This is 4 lakhs only. Rectified, okay, na? Fine, right? Are you with me? Remaining loan is correct only. Remaining all components exactly matched, right? Can I continue? Yeah, if any time I considered wrongly, if I read it wrongly, please let me know at that point of time, because if I go at the end, I may not observe. Okay, sometimes it might happen. We are almost in good flow. So at that point of time, I might missed out while reading the sentence or somewhat. Okay, fine. Sir, in book it is 40,000 shares. In which book, yeah? Some more person is telling that it is 40,000 shares only. Okay, let it be. We will check at the end. Guys, the directors have agreed to subscribe in cash for 40,000 is given. New equity shares of 2.5. He is not mentioned 40. One second. Let me read the sentence clearly one more time. Here, comma is there. The directors have agreed to subscribe in cash for 40,000 new equity shares of 2.50 each, in addition to any shares to be subscribed by them under A above. These are shares only, yaar. Earlier, this is there. I didn't see the comma here. Okay, here comma is there. 40,000, whenever comma is given, these are 40,000 new equity shares only. For example, here comma is not available. If you read, the directors have agreed to subscribe in cash for 40,000, you may read. Earlier, I didn't see the comma. Janesh, you confused me again. Okay, whatever the thing I made, that was previously correct. Am I right? 1 lakh is only correct. Please, all of you, let me put certain thumbnails. 1 lakh is only correct, right? Because in cash for 40,000 new equity shares were given. If the same sentence is given that without putting any comma, the directors have agreed to subscribe in cash for 40,000 new equity shares of 2.50 each. then you can consider which is 40,000 of cash. But here it is clearly mentioned the comma. What it will tells to us, sir, 40,000 is separated. New equity shares are separated. That is 40,000 new equity shares, he is telling. So that's why my earlier figures itself is correct. Again, I don't want to change the notes, guys, just to make it present 10,60,000. That is correct only. Okay, Janesh, hope you understand. Due to you, I changed the solution, and again I realized that what I did previously, that was correct. Where it is here. Okay. Yeah, sometimes it happen. Don't worry. Please come down. Sir, what else? What are all the other situations, guys? Quickly, please, all of you, let me know quickly what are all other situations. Go to the balance sheet. Go to the balance sheet here. Sir, trade payables and other liabilities. Is there any change for the trade payables? Anywhere we touched? I think so. No way we touched the trade payables. Am I right? So you can consider the as it is trade payables figure. Be trade payables 2,07,000. Okay, fine. Next, come for other liabilities. Sir, anywhere we touched the other liabilities? These actually coming under current liabilities actually. Okay. So other liabilities, I think so. No way we touch the other liabilities as well. You can put it in the same figure, 35,000. Fine. Other liabilities is 35,000. Apart from this, any other liabilities are there, guys? Nothing. Don't make it total. First go for the assets. So come to the assets portion. Under assets, non-current assets. Under non-current assets, A, PPE. Fine. In property, plant and equipment, building and plant. Nowhere upward revaluation, downward revaluation happened, right? Please, if you want, you can cross check here. Nowhere we touched them. So as these figures, you can put 4 lakhs plus 2,68,000, 6,68,000. So which is 6,68,000. Next, trademarks and goodwill, out of which intangible assets, 3,18,000 minus we knock off something, 1,66,500 we reduced. How much? 3,18,000 minus 1,66,500. That is 1,51,500. Next, guys, after intangible assets, inventory is there, trade receivables is there. Next, you can go for current assets. A, inventory. Sir, inventory anywhere we reduced. Plant, one more thing, guys. I think so. Plant is here, is there. I ignored that. Plant we reduced now 35,000. I'm so sorry. Today what happened, I don't know, to me. Okay, so many clerical mistakes. 6,68,000 minus 35,000. Plant is also there. Please, all of you consider this. I ignored. 6,68,000 minus 35,000, which is 6,33,000. Okay, that's fine. Sir, inventory anywhere, please check, all of you. Inventory, nothing. Yeah, you can directly consider the same value of the inventory which was given in the balance sheet for 4 lakhs. Fine. After that, trade receivables. Anything happened for the trade receivables? Please, all of you cross check the journal entries. This is trademark, not the trade receivables. Okay, come up. Nowhere we touched the trade receivables. That's why as this figure you can put how much, which is 3,28,000. Fine. After that, P&L account, it doesn't come into the picture. We already knock off with the reconstruction. You can cross verify cash and cash equivalents. Cash and cash equivalents we should need to check. Please consider one by one journal entry here. Start with first entry. Yes, there is no cash involved. Second entry, 1,12,500 inflow. Third entry, no inflow, outflow. Fourth, nothing. Fifth, again inflow, 1 lakh. Okay. Sixth, outflow of 2 lakhs. Yes. 7th, no inflow and outflow. So I end up with 12,500. Is it correct figure, guys? 12,500 is correct figure. Let me know the totals of balance sheet from your end. Anything ignored, guys? We all work out, right? Okay, now let me know, guys, total of the liabilities and total of the assets quickly. 10,60,000 plus 2,23,000 plus 2,07,000 plus 35,000. 15,25,000. This side 6,33,000 plus 1,51,500 plus 4 lakh plus 3,28,000 plus 12,500. Just a moment. 6,33,000 plus 1,51,500 plus 4 lakhs plus 3,28,000 plus 12,500. This side also 15,25,000. Okay. Tallies, right? So please all of you cross verify. From your side also it tallied. Fine. So in internal reconstruction problems, nothing is there. The only one paining factor is you should need to consider each and every component, how it is impacted. If that is okay with you, then you can easily enjoy the problem. Okay, come down. Okay, come to problem number 5, guys. All of you, let me resolve the problem number 5, which is also a different problem. That's why just I want to take it into discussion. Repair Limited is in the hands of a receiver for debenture holders who holds a charge on all assets except uncalled capital. Except uncalled capital. The following statement shows the position as regards creditors as on 30th June 2015. 6,000 shares of rupees 60 each, 30 paid up. First debentures 3 lakhs, second debenture 6 lakhs, unsecured trade payables 4,50,000. So PPE estimated at 1,50,000, cost price is at 3,90,000. Cash in hand of the receiver 2,70,000. Then charged under debentures 4,20,000, uncalled capital 1,80,000. Then the amount given at 6 lakhs, deficiency was 7,50,000. Totals here 13,50,000, here 13,50,000. Now quickly I'm asking one question to all of you. What is the P&L account debit balance? What is the P&L debit balance? All of you, please let me know quickly the answer. P&L debit balance is how much? P&L debit balance is how much? Priyanka, sir, earlier problem not tallying for me. Okay, please check it, ma. It is tallied. All the figures tallied. You can check it at the free time. Please come to the problem. Otherwise, you miss out the concept. Okay. P&L account debit balance how much? All are telling that 7,50,000, 7,50,000. You are simply telling that this 7,50,000 is P&L account debit balance, right? That's not correct. This is not the P&L account debit balance. That is the reason why I'm taking this problem for the discussion. Actually, if I would take this problem after completion of liquidation, then you can easily understand that this 7,50,000 is not the P&L. But anyway, here the given information is not the balance sheet. Just they are tempting that these figures look like the balance sheet. Why, sir? Sir, balance sheet at any point of time, estimated figures will you consider? 1,50,000 is an estimated figure. You should not consider. Uncalled capital is form part of the balance sheet? No. Uncalled capital is nothing but the capital contribution should be made by the shareholders at the time of liquidation of the company. If the liquidator doesn't have the sufficient cash balance on their hand, then the liquidator will ask that money from the shareholders. At that point of time, shareholders will contribute, which is nothing but uncalled capital. And if you check, nowhere it was presented the share capital. Just it was given under the liabilities portion, but amount was nil. So that's why which is not a balance sheet. No need to understand the entire problem. First, you should need to build the clear balance sheet. Now, if I build the clear balance sheet, if I need to build the clear balance sheet, this is liabilities amount, assets amount. First, start with share capital. So 6,000 shares of rupees 60 is 30 paid up. That means if you consider these are equity share capital, 6,000 shares of rupees 60 each, 30 paid up. That is 1,80,000. 6,000 into 30 means how much here? Which is 1,80,000. Next, first debentures, which is a liability. First debentures given at 3 lakhs. Second debentures given at how much? 6 lakhs. Next, unsecured trade payables, 4,50,000. Simply trade payable, 4,50,000. Next, come here, PPE. Simply, I am writing it as a PPE. Estimated figure you should not consider. The original cost is how much? It should need to consider in the balance sheet. Next, cash in hand of the receiver. That is simply cash in hand. Cash in hand, how much? 2,70,000. What is this 4,20,000, sir? They added 1,50,000 plus 2,70,000. They got 4,20,000, which is charged under debentures. Means now the PPE and the cash in hand is available as a security for the debentures. They are conveying that information. It doesn't come into the balance sheet now. Just they added 1,50,000 and 2,70,000, which they got 4,20,000. Just they are conveying that we are having to the extent of 4,20,000 as a security to repay amount to the debenture holders. Uncalled capital doesn't come into the balance sheet. Deficit, it doesn't come into the balance sheet. Now, these are the balance sheet items. If you check the balance sheet totals, 1,80,000 plus 3 lakh plus 6 lakh plus 4,50,000. Total 15,30,000. This side also you can consider 15,30,000. Then the balancing figure is P&L account. How much you got? 3,90,000 minus 2,70,000. 8,70,000 is the P&L account debit balance. Here you should need to find out the P&L account debit balance. Deficiency is not the P&L account debit balance. What is the meaning of deficiency, sir? We are going to see the meaning of deficiency in the chapter liquidation of companies. I don't want to discuss such factors in this chapter because our next chapter itself is liquidation of companies. That's why. Are you with me? Do you agree, guys, all of you? Let me check the query box. It's 8,70,000, right? Fine, super. Now, let me read the further information in the problem. A holds the first debentures for 3 lakh, second debentures for 3 lakh. He is also an unsecured creditor for 90,000. Come to Mr. A. Now, for Mr. A, he is acting as first debenture, he is acting as second debenture, he is also acting as trade payable. So first debentures he had for the worth of 3 lakhs, second debentures for the worth of 3 lakhs, trade payable for the worth of 90,000. Super. B holds second debentures for 3 lakh and is an unsecured trade payables for 60,000. Okay, come to Mr. B. Mr. B, he is acting as second debenture holder as well as trade payable. 1 second. Second debenture holder and the trade payable holder. So second debenture holder, how much guys? Mr. B, 3 lakh, which is 3 lakh, and the trade payable for 60,000. Now simply I'm asking few questions here. All of you let me know. Total, how much should need to be payable to Mr. A? 3 plus 3, 6 plus 90, 6 lakhs 90,000. Total, how much amount payable to Mr. B? 3 lakhs plus 60, 3 lakhs 60,000. Am I right? Fine. Now come down. The following scheme of reconstruction is proposed. A is to cancel rupees 2,10,000 of the total debt owing to him. Now, what is the total debt owing to Mr. A from the given information? 6 lakhs 90,000. To bring 30,000 in cash and to take first debentures in cancellation of those already issued to him for rupees 5,10,000 in satisfaction of all his claims. We are not at all understand anything, sir. So please read the sentence line by line. A is to cancel rupees 2,10,000 of the total debt owing to him to bring 30,000 in cash. So to bring means A is bringing 30,000 cash into the organization. Once A is bringing 30,000 cash into the organization means how much amount we should need to payable to Mr. A, sir? 3 plus 3 plus 90. Apart from this 6 lakhs 90,000, if once Mr. A introduced 30,000 cash, that 30,000 also payable to Mr. A. 6 lakhs 90 plus 30,000, total 7 lakh 20,000 we should need to payable to Mr. A. First, you should need the point number 1 from here onwards. First, to bring 30,000 in cash, then the total amount payable to Mr. A was 7 lakh 20,000. Now, out of this 7 lakh 20,000, A is to cancel 2 lakh 10,000. So 2 lakh 10,000 will go to reconstruction straight away. 7 lakh 20,000 minus 2 lakh 10,000 means remaining I should need to pay 5 lakh 10,000. What about this for 5 lakh 10,000? For that, to take the first debentures for 5 lakh 10,000. First debentures means these are all together new debentures. He is issuing new first debentures. He is issuing for 5 lakh 10,000. Sir, then what is the journal entry, sir? First, all of you please concentrate. The first entry. First, how much amount payable to Mr. A? First, let me write. That is first debentures account debtor 3 lakhs. Second debentures account debtor another 3 lakhs. Trade payable account debtor 90,000 to Mr. A 6 lakhs 90,000. After that, A introduced cash for 30,000. If A introduced cash for 30,000, then bank account debtor to Mr. A account. Total, now if you observe Mr. A, how much balance it is showing in our books? 6 lakhs 90 plus 30, which is equal to 7 lakh 20,000. For such 7 lakh 20,000, you should need to cancel the A account. Mr. A account 7 lakh 20,000. Out of which, reconstruction, he is ready to sacrifice to the extent of 2 lakh 10,000. A is to cancel, means ready to sacrifice 2 lakh 10,000. For the remaining balance of 5 lakh 10,000, he is expecting new first debentures. New first debentures account. That is 5 lakh 10,000. Like this, you should need to think. Any doubt, guys? Point number 1. Let me know your. Any doubt? Can I proceed? At least one person. Then I'll proceed. Is it understand? Anyone having any doubt? Just they are jumbled the sentences to confuse you. But what really happens if you understand, you can simply go with the journal entry. Next, come to point number 2. B is to accept 90,000 in cash satisfaction of all claims by him. First, all claims by him means, first, how much amount payable to Mr. B? First, you should need to check. Mr. B, second debentures 3 lakhs, trade payable 60,000. So debit the second debentures for 3 lakhs, trade payables for 60,000. So total amount payable to Mr. B 3 lakh 60,000. For this 3,60,000, only 90,000 only you are paid. Remaining the entire amount is sacrificed. So Mr. B account debtor 3,60,000 to bank. How much amount we are paying? 90,000. To reconstruction remaining. So 3,60,000 minus 90, which is 2,70,000. Am I right? This is all about point number 2. Okay. Just a second. Next. Yeah. Next, come here, guys. All of you, please concentrate. Just I changed the dark mode because in white and white it is completely merging. This is white color. This is black color. We can easily identify. That is the reason. Fine. Come to point number 3. In full settlement of 75% of the claim, unsecured creditors other than A and B. Unsecured creditors means only this unsecured trade payable. First, other than A and B, trade payables. How much? Let us check. All of you, please come here. So you can come for trade payables, guys. In bracket, other than A and B. So total trade payables were 4,50,000. Out of which for A 90,000, for B 60,000. Just now we seen. That is 1,50,000. 4,50,000 minus 1,50,000 means it is nothing but 3 lakhs. Now something he is talking about this 3 lakhs. Now what he is talking in point number 3, in full settlement of 75% of the claim. In full settlement of 75% of the claim means out of this 3 lakhs, he is something talking about 75% claim. That is 3 lakhs into 75%. How much? 2,25,000. Okay, he is talking about 2,25,000 first. In full settlement of 2,25,000, unsecured creditors other than A and B agreed to accept 4 shares of 7.50 each. 4 shares of 7.50 each ante 4 shares of 7.5 is equal to 30 rupees. Fully paid against their claim for each share of 60. For every 60 rupees, we should need to pay 30 rupees. For every 60 rupees, we should need to pay 30 rupees means what about the other 30? The other 30 is sacrifice. Sacrifice. Sir, simply out of the trade payables of 2,25,000, 50% portion was sacrificed, and for the remaining 50% portion, just they are expecting the equity shares. Each equity share value was 7.50. That is the point he is conveying up to this. The balance of 25%. This is the balance 25%. Balance 25% means 75,000. 3 lakh minus 2,25,000 means 75,000 is to be postponed and to be payable at the end of the 3 years from the date of the court's approval of the scheme. This should be now you can treat it as a long-term borrowing because it is clearly given that it should be need to be payable after 3 years. Okay. Now I'm conveying the entire thing once again. Please concentrate. Other than A and B, trade payable was 3 lakhs, out of which the 75% is claim. That is for 2,25,000. To the extent of 50%, they are issuing the equity shares. How they are given? 4 shares of 7.5 each. That is 30 rupees. For fully paid against their claim of each share of 60. For every 60 rupees, they are paying 30 in the form of equity shares. And the other 30 sacrifice made by the trade payable holders. Now for this, what is the entry, sir? The entry is unsecured trade payables account debtor 2,25,000 to equity share capital. Face value is 7.5 for half the amount, exactly 1,12,500 to to reconstruction for the other 1,12,500. So that means how many number of equity shares you should need to issue? 1,12,500 divided by 7.5. Not required, just I'm telling 15,000 equity shares you should need to issue. Is it okay? This should be shown in the long-term borrowings under balance sheet. This is all about point number 3. Any doubt, guys? Let me know in point number 3. No doubt, right? Understand, right? Next. Come to point number 4. Uncalled capital is to be called up in full. If you observe in balance sheet, we only built here. Here, equity shares are 6,000 shares. Face value is 60 rupees, out of which 30 only paid up. He is telling that uncalled capital is to be called up. Just you can make a call. If you make a call, what is the entry, guys? All of you? The entry is equity share final call account debtor to equity share capital for 6,000 shares, 30 rupees. That is 1,80,000. If you receive the call amount, then bank to equity share final call account. Right? These are the entries at the time of making call from equity shareholders. Uncalled capital is to be called up in full and 52.50 per share cancelled. After calling, you are cancelling 52.50. How it is possible, sir? Once you called this, then each and every equity share will become 60 rupees paid up, which is fully paid up. Out of 60 rupees face value, 60 paid up. Now what you are doing? You are cancelling the existing 60 rupees face value. So that is existing 60 rupees face value to the extent of 3,60,000. That is 6,000 into 60 to equity share capital 7.5. 6,000 into 7.5. 6,000 into 7.5, which is 45,000. He's telling that, and 52.50 per share cancelled. Cancel means it should need to transfer to reconstruction. To reconstruction account. What is the balance? 3,15,000. How you got this balance? 6,000 into 52.5. If you want, you can cross verify. 6,000 into 52.5. It will become 3,15,000. This is the cancellation entry. Thus making the shares of rupees 7.50 each. I made a call, received the call amount. After that, cancelled 52.5 per share to become each and every share as a 7.5 per each. Next, assuming that the scheme is duly approved by all parties interested by the court, give necessary journal entries. Now, after this, what you should need to do? You should need to find out the balance under reconstruction account. From the first entry, there is no balance. Second entry, no balance. Third entry, reconstruction 2,10,000. Start all of you in your calculator. Start this 3,10,000. Sorry, 2,10,000 under reconstruction. In the fourth entry, no. In the fifth entry, you have 2,70,000 plus 2,70,000. Come down. Here we have 1,45,000. Okay. 1,45,000 or 1,12,000. Sorry, this is 1,12,500. So please, all of you go for 1,12,500. This is add 1,12,500 plus come down. Here just now you got 3,15,000. Add 3,15,000. How much balance you have? Total 9,07,500 is there in reconstruction account. Am I correct, guys? 9,07,500 we have under reconstruction. Please let me give a reply here. Then I'll proceed further. Yeah, Janice, I will explain. Just hold. Okay, first let me close the problem, then we'll come for the adjustment once again. Okay, guys, let me know the total balance under reconstruction. I got 9,07,500 before set off. This is correct only, right? No one is talking here. This is correct only. Can I able to proceed? Yes. Now, what should I need to do? I should need to cancel this 9,07,500 with the P&L account balance. Where the P&L account balance? Here I have 8,70,000. Now you can cancel the P&L account debit balance by writing the entry reconstruction account debtor 9,07,500 to P&L account debit balance, which is only for 8,70,000. What about the remaining balance? I should need to transfer to capital reserve. That is 37,500 will be the capital reserve. This is the final entry you should need to do. Now, sir, so many persons just they're asking a doubt regarding this adjustment. Okay. All of you, please read the sentence carefully. What is given, you should need to understand first. In full settlement of 75% of the claim related to unsecured creditors other than A and B. First of all, you should need to calculate other than A and B unsecured creditors how much. Sir, the total unsecured trade payable was 4,50,000. Related to A 90,000, related to B 60,000. Other than A and B means the remaining balance is 3 lakhs. Now, out of such 3 lakhs, he is talking about 75%. Out of such 3 lakhs, 75% is 2,25,000. Now he is talking about this 2,25,000. Out of 2,25,000, every 4 shares of 7.50 each, fully paid against their claim for each share of 60. What they are telling, let us assume for every 60 rupees share means it is not equity share or something. For every portion of the 60 rupees, just they are issuing 4 shares of 7.5. These are equity shares. 4 into 7.5 shares. That is, 4 shares into 7.5 each. Now 4 shares into 7.5 each means 30 rupees. Indirectly, what they are conveying, for every 60 rupees portion of this 2,25,000, the company is going to issue 30 rupees worth of equity shares. That is, for every 2,25,000, for the entire amount of 2,25,000, the company is going to issue 50% in the form of equity shares. For the remaining 50%, it was cancelled, means simply sacrificed. That's why for the entire portion of 2,25,000, I'm issuing for the 50% in the form of equity shares, and the remaining simply I make it transfer to the reconstruction account. Is it okay? So some of the persons actually asked that doubt. I clarified. Okay. So that's it, guys. Actually, in the problem, just they are only asked to pass the journal entries. No need to go for the balance sheet. Guys, please all of you go for the break. It's time 8:20. Let us assemble by 8:35. After the break, immediately and freshly, I will start the concept of surrender of shares. We will do the problem on surrender of shares. After that, still we will continue for the problems based upon our time till the end of 9:30. Go for the break, guys, all of you. Welcome back, guys. Please, all of you, put the heading surrender of shares. Friends, let me know, all of you. Do you know the concept of forfeiture of the shares? Forfeiture of shares. When forfeiture of shares concept is applicable? If at the time of making call by the company to shareholders, if the shareholders unable to repay that amount to the company, then the company have a right to cancel the shares. It is a right given by Companies Act 2013. And at the time of cancellation of such shares, no need to repay any single rupee to the shareholder, even though he contributed certain portion in the form of application money or allotment money. Am I right? Then such concept is known as forfeiture of the shares. Now here the thing is, forfeiture of shares concept is applicable when the shares are partly paid up and the company make a call and the shareholder unable to repay, and no need to pay any amount back to the shareholder. Without that, company can go for cancellation. Now, if you come for surrender of shares concept, in nowhere in the Companies Act 2013 explained things related to surrender of shares concept. That means simply, in generally, company do not have any right to ask the shareholder, you should need to surrender your shares to the company. What surrender of shares concept means? The title itself tells clearly that each and every shareholder is surrendering certain shares. Now that surrendering should need to happen voluntarily. It is not a compulsion. Because nowhere in the Companies Act 2013, it is given to surrender shares by the equity shareholders or the preference shareholders, whatever the case may be. But forfeiture is a right given by the Companies Act 2013. Forfeiture is take back such equity shares by the company is a right given by the Companies Act 2013. And one more thing, forfeiture may happen in case of partly paid up shares, that too at the time of non-payment of call money. But surrender of shares concept is applicable only if all the shares are fully paid up. All the shares are fully paid up. And one more thing, whenever the concept of surrender of shares is applicable or it is made by the company, it should happen after consideration or after approval of court only. Anyway, we already took approval from the NCLT, because we are in the process of internal reconstruction. We already took approval from the court, then court approved for that. Then if any shareholders voluntarily surrender their shares, then the company can agree. Do you understand? So this is the difference between forfeiture and surrender. Sir, why you are comparing both the things here, sir? Because in case of forfeiture of shares also, we are cancelling the existing share capital. In case of surrender of shares also, we are cancelling the existing shares. In case of forfeiture of the shares, after forfeiting, you may go for reissue. You may go for reissue to the general public. In case of surrender of shares also, after such shares were surrendered by the shareholder, you can go for reissue of the share surrender. To whom right now you may reissue the share surrender either to debenture holders or either to creditors or either to loan providers or either to other shareholders. Anything may happen depending upon the requirement in the process of internal reconstruction. Do you understand? Sir, but coming to accounting treatment, due to surrender of shares, what happens, sir? Due to surrender of shares, only one thing happened. Company is getting certain profit. Due to surrender of shares, what happens, sir? Company will attaining certain profits during the process of internal reconstruction. Now the profits which they attained ultimately useful to set off the P&L account debit balance and to reduce the unrepresented intangible assets and other assets, and such all other things will follow. Okay, that is the base concept, no doubt about it. Now, at the time of surrender of shares concept, how the accounting treatment will be, we are going to see through a small case. Let me develop a small case. So the existing equity share capital, the existing equity share capital, 1 lakh equity shares are there at the rate of 10 rupees each, that is 10 lakhs. Now, out of this 1 lakh equity shares, let us assume 80,000 equity shareholder or 80,000 shares are surrendered their shares to the company. Surrender their shares to the company. Whenever shares surrendered by the company, then company should need to cancel the existing equity share capital by providing this entry. That is equity share capital account data 80,000 into 10 rupees, which is 8 lakhs, to share surrender account. Sir, what is this share surrender account, sir? This is temporary account, guys. Once the shares were surrendered by the shareholder, the company will not go for direct cancellation, because if you go for cancellation, if at any point of time, if you need to issue such share to the other parties, again, you should need to create such shares. So creation of shares is involving certain cash outlay. The reason is, if it is the listing enterprise, again, for the new number of shares issue, you should need to pay the listing fees. Okay, you should need to pay the stamp duties. Such all things are going to occur. That's why whenever shares surrendered by the shareholder, then immediately company will not go for cancellation. Just such shares, they are parked under one account, share surrender account. The physical shares were also exist. It was in count only. In company count only. But such shares were not issued to no one the party. Such shares are lying with the company hands. Okay. Now the point is, sir, existing creditors I have in my company, creditors for the worth of 5 lakhs. Let us assume for the worth of 5 lakhs I have. Now, out of the share surrender to the extent of 5 lakhs, I'm going to issue equity shares to these creditors, sir. To these creditors. Then what is the journal entry I should need to pass? Now, first, if you are going to issue equity shares out of share surrender, first you should need to utilize the share surrender. Utilization of share surrender. For the purpose of utilization of share surrender, always the entry is, you should need to reverse. That is share surrender account data to equity share capital account. Simply whatever the entry you passed earlier, just you make it reverse here. But here to the extent of 5 lakhs only. Sir, but where the settlement happened to the creditor, sir? Where the settlement happened? Just now you issued equity shares, na? But where the creditor's account debited, sir? Now you should need to debit the creditor's account by passing the entry creditor's account data to reconstruction account. That is 5 lakhs. 5 lakhs. You can't understand the logic behind passing these entries, sir. Please concentrate. I'll tell you in very simple mode. You can easily understand. Sir, at the time of creation of share surrender, do you recognize any profit? Actually, the shares are surrendered by the shareholders means, which leads to profitable situation to the company. But company is not recognizing any single rupee as a profit. If any amount is sacrificed by the shareholder directly, then in the earlier situation, we straight away transfer to the reconstruction. But if the shares are surrendered by the shareholders to the company, then just we pass equity share capital to share surrender. We are not transferring any amount to reconstruction. When we are really transferring that amount to reconstruction, if you are utilizing the share surrender, through that, if you are making payment to any particular party, at that particular scenario, you are recognizing the profit. That means simply at the time of creation of share surrender, I'm not recognizing any profit, but at the time of settlement to a particular liability holder by utilizing the share surrender, I'm recognizing the profit. That is the concept behind the transferring the amount to reconstruction while settling to the creditors. So that's why at the time of utilization, just you pass the entry share surrender to equity share capital. Till now, you are not recognized the profit, right? Now you are settling that amount to the creditors, right? Now you are recognizing the profit creditor to reconstruction. Now this is settlement entry. The very simple point you should need to observe here is at the time of utilization of share surrender, I will pass this entry only, that is share surrender to equity share capital. But whatever the profits really I got due to issue of shares out of share surrender to the creditors, I am recognizing at the time of settlement to the creditors by passing the entry creditors to reconstruction. Now, if you check what impact here really occurs, sir. Sir, reconstruction is a credit. Share surrender is also a type of profit. Here, share surrender, if you can presume that it is a reconstruction, then share surrender reconstruction will cancel with each other. Then the net entry is creditor to equity share capital only. What happens really here? Creditors balance vanished. You are issued the equity share capital. The same thing happened, share surrender to reconstruction. Now, share surrender here you have na. This is nothing but reconstruction balance. But why you are not directly transferring equity share capital to reconstruction at the time of surrender of shares? If you directly transfer this amount to reconstruction, you are unable to issue such shares to any particular party. You are canceling your shares. But my objective is not the canceling of the shares. First, I want to put such shares under a temporary account, which is share surrender account. Now, at the time of utilization of such share surrender, I am issuing such shares to the equity shareholders by passing the reverse entry share surrender to equity share capital. Then you may ask a question, sir, when you are recognizing profit, sir? I am recognizing such profit at the time of settlement of that particular party, that is creditor to reconstruction account. Is it understand, all of you? Now, my conclusion is, please all of you concentrate about this conclusion. Otherwise, you might confuse. Conclusion is, at the time of surrender of shares, I will not recognize any profit or loss. Just at the time of surrender of shares, I will cancel share capital, put that amount into share surrender account simply. Now, if you utilize such share surrender and issue shares to any party, at that point of time, you should need to work out two things. One, you should need to issue the shares. For that, share surrender to share capital. Now, at the time of settling to that party, you are recognizing the profit which you derived through share surrender. Now you are issuing the equity shares out of the share surrender. Now you are settling that party. At the time of settlement, by using shares out of share surrender, now you will recognize the profit. Actually, what is that profit? That profit belongs to shares surrendered by the equity shareholder. But that profit we are not recognizing at the time of surrender of shares. That profit we are recognizing at the time of utilization of share surrender. That is the simple issue. If you are really realize that fact, we are not recognizing the profit at the time of surrender of the shares. We are recognizing the profit at the time of utilization of share surrender. Then accounting treatment is over. So that's why at the time of settlement, that party means creditor or debenture holders to reconstruction is the entry. Is it okay to all of you? These are the conclusions drawn by me. Just a second, ma. Coma something. She's asking something. Okay, just wait. I'll resolve one by one. This is only a single case just I gave. Can I pass the net entry in this case? No, don't pass the net entry. I told the reason. If you pass the net entry at this stage, then what happens really? Share surrender account is different, reconstruction account is different. Okay. Now, at the time of utilization, now this portion you should need to first reverse. First, where is the issue happen? For that, you should need to prove this. Okay. Then where is the profit? For this, you should need to prove this. That is the reason why you are making two different entries. Otherwise, you would pass simply creditor to equity share capital. Na? No need to take out. Simply you can pass creditor to equity share capital as like in the previous situations. But here the thing was different. First, you are getting shares from the shareholders. After that, you are issuing again. Then you are recognizing the profit. That's why three different situations were happen. So that's why three different entries you should need to pass. Okay, just hold for some time, guys. Still my discussion not yet over. Let me continue. If I give different cases, then you can easily understand. The other case is, sir, still this is case number 2. Case number 2, creditors with me is still 5 lakhs. Still 5 lakhs. Now the thing is, out of this 5 lakh, 3 lakh I am paying to the creditors out of share surrender account. For the remaining 2 lakh, there is a sacrifice made by the creditors. Now, what is the entry, sir? First, always you should think that, sir, in our share surrender account, we have the balance of 8 lakhs. We know. Now, first, whenever you are utilizing the share surrender, for utilization of share surrender, what is the entry, guys? For utilization of share surrender, the entry is share surrender account at R or surrender of shares account at R, whatever the case may be, to equity share capital. How much? 3 lakhs. Super. This is at the time of utilization of share surrender. But when you recognize the profit at the time of making settlement to the party, that is creditors account at R, just in bracket you can put 3 lakhs. Now you are settling 3 lakhs to reconstruction. Now you should need to recognize the profit 3 lakhs. Just till now, I'm only thinking about the portion of the creditors. What about the other portion of the creditors, sir? 2 lakhs is a real sacrifice. Na? If they are making the real sacrifice, that amount should need to go to reconstruction. Always, if this is the real sacrifice means, I should need to go for reconstruction for another 2 lakhs. So the total reconstruction is 5 lakhs. If 2 lakhs is cancelled means, this is also I should need to put here. So this is 5 lakhs. So the entry is creditors account data to reconstruction, out of which 3 lakh to profit realized through share surrender, and another 2 lakhs is the real sacrifice made by the creditors. So the two entries were share surrender to equity share capital 3 lakhs, creditors to reconstruction 5 lakhs. Do you understand everything? Next, let me put another case quickly, guys. Please don't stop my flow. Let me put the third case. Then after that, if you have any doubt, I will resolve. Case number 3. Still I have creditors with me 5 lakhs. Now the issue is, out of this 5 lakhs, creditors expecting 3 lakhs. Just a second. Okay, one second. For portion of 3 lakhs. Okay, let me continue the same thing. No need. For the 3 lakhs, I'm issuing equity shares out of share surrender. For the other portion is there, na? For the other portion means 2 lakhs. They're ready to sacrifice, provided they're expecting 50,000 worth of equity shares. Provided they're expecting 50,000 worth of equity shares. Now, once again, I'll tell you the case. The total creditors balance is 5 lakhs, out of which 3 lakhs we are paying or we are issuing equity shares by utilization of share surrender. For the remaining 2 lakhs, they're straight away sacrificing. But as a result of the sacrifice made by them to the extent of 2 lakhs, in return, they are expecting that 50,000 worth of equity shares. And our company is also going to issue for such 50,000 worth of equity shares by utilizing the share surrender account only. Now, how to provide the accounting treatment for this situation? Don't be confused. First of all, whenever you are utilize share surrender, here 3 lakhs, I'm issuing equity shares by utilizing share surrender. For this 50,000 also, I'm issuing equity shares through utilization of share surrender. That's why entry share surrender account data to equity share capital. That is common. How much amount you are using for the share surrender? 3 lakhs plus 50,000, total 3,50,000 you are using. That doesn't change. But here amount is 3,50,000. Next. Sir, now you are settling the creditors, right? Please all of you concentrate. Creditors account data to reconstruction account. Sir, how much amount you utilized for share surrender, to that extent you should need to recognize as a profit, because you are utilizing the share surrender means now you should need to recognize the profit. That means I utilized 3,50,000 balance of share surrender. That's why I should need to transfer amount to 3,50,000. Super. Now let me know all of you one thing, guys. Sir, gross sacrifice was 2 lakhs. But in return, they're expecting 50,000 worth of equity shares means we know the net sacrifice is only 1.5 lakh. The real net sacrifice. To the extent of real net sacrifice, you should need to transfer to reconstruction account. We know this concept we are not learning at this point of time, at the time of discussion of theory. At the inception of this chapter itself, we've seen. To the extent of net sacrifice, you should need to transfer to reconstruction. To the extent of net sacrifice, how much? 1,50,000. Now 3,50,000 plus 1,50,000, 5 lakhs. Creditors, you should need to cancel 5 lakh. Now, what's my conclusion? From these 3 different cases, sir, in case number 1, if you observe, for the entire 5 lakhs, you paid the 5 lakhs out of share surrender. Reconstruction account, you transferred 5 lakhs. In the second case, for out of 5 lakhs, 3 lakhs paid in the form of equity shares by utilization of share surrender, and other 2 lakhs right away sacrificed. You transferred 5 lakhs again to reconstruction. In that case also, you transferred 5 lakhs to reconstruction. In the third case, creditors out of 5 lakhs, you issued equity shares by utilization of share surrender, and the remaining 2 lakhs, they sacrificed. In return, they're expecting 50,000 worth of equity shares. Then at that scenario, also you are transferring 5 lakhs to the reconstruction account. What my conclusion is, entire amount settled through surrender of shares, certain portion through surrender of shares remaining sacrificed, certain portion of shares settled through surrender of the shares, remaining portion sacrificed. In return, they're expecting something again that we are issuing out of surrender of shares. Amount need to transfer to reconstruction account doesn't change. But if you observe in the first case, for the share surrender, I transferred 5 lakhs. Share surrender, I debited 5 lakhs and transferred equity share capital 5 lakhs. In second case, I debited share surrender only for 3 lakhs. In the third case, I debited share surrender for 3,50,000. That will change. That depends upon how much balance you are utilizing the share surrender. Is it concept clear? Tell me, guys, quickly. Before going to the problem, let me check the query box. Anyone having any doubts? Yeah, okay, Abdul. I'll call you as Abdul. I think so. Some issue is there with the app. It is showing a different name. It's clear, right? Sir, third case, can you please explain? Okay, I'll explain third case once again as per the request of one of my student. Sir, creditors balance is given at 5 lakhs and we are issuing equity shares 3 lakhs by utilization of share surrender. For that, no doubt, right? That is share surrender to equity share capital 3 lakhs amount and creditors to reconstruction 3 lakh amount. For that, no doubt about, right? Now for the remaining only, right? Out of this 2 lakh gross sacrifice, In return, they're expecting 50,000 equity shares, 50,000 worth of equity shares. Such 50,000 worth of equity shares also we are issuing by utilization of share surrender. Now again here, how much balance you are utilizing for share surrender? 50,000. Then you can add one more 50,000 here. Share surrender to equity share capital 50 and creditors to reconstruction. Creditors to reconstruction. How much you should need to work out? 2 lakhs is the gross sacrifice. 50,000 is in return they're expecting, means 1,50,000 is the net sacrifice. So that 3 lakhs plus 1,50,000 total. How much, guys? 3 lakhs plus 1,50,000, 4,50,000 plus to the extent of 50,000 worth of equity shares we are issuing in return. So total 5 lakhs. Now 3 lakhs straight away utilization. For 50,000 in return they are expecting, that's why you are utilizing. So 3.5 lakh you should need to make it transfer to. You should need to make it transfer to reconstruction account because you are utilizing the share surrender. Remaining 1.5 lakh is net sacrifice. For that you should need to transfer to reconstruction. Total 3.5 lakhs for the purpose of utilization of share surrender, for 1.5 lakh for the purpose of real sacrifice. Total 5 lakh you should need to make it transfer to reconstruction. Is it clear? So still if you have any doubt, such all doubts, those are going to resolve through the next problem, guys. Okay. One more thing, guys. Before proceeding with the problem, let me conclude the share surrender concept. Sir, still after writing all such entries, if there is any balance in share surrender, what I should need to do, sir? Now you are not utilizing the share surrender, then you can make it transfer to reconstruction account. Then realize it as profit. Because whatever the things you required for that, you already utilized the share surrender, you already issued the shares. Now, if you are unable to utilize the share surrender, at least at this stage, you should need to recognize it as a profit, transfer to reconstruction. From reconstruction, you know how to deal the situation. P&L account debit balance set off, unrepresented asset debit net off, the remaining balance you can make it transfer to capital reserve. Sir, without any delay, first let me take up one problem for the discussion. Then still if you have any doubts, I will explain at the end of that problem. Yeah, this is the problem related to share surrender. Come to problem number 8, all of you. The summarized balance sheet of Revise Limited as of 31st March 2011 was as follows. So fixed assets, those are nothing but PPE. Machineries given. Current assets, inventory, trade receivables, bank, P&L account debit balance were given as usual, which is loss. Come to liabilities, authorized share capital, 10,000 equity shares of rupees 100 each, given at 10 lakhs, which are fully paid up. Paid up capital and authorized capital both are same here. Unsecured loans, 12% debentures given, accrued interest is there. Current liabilities, trade payable, provision for income tax given. Further information, it was decided to reconstruct the company for which necessary resolution was passed and the sanctions were obtained from the appropriate authorities. Appropriate authority means from NCLT. Accordingly, it was decided that each share is subdivided into 10 fully paid up equity shares of rupees 10 each. Each share is subdivided into 10 fully paid up equity shares. Come here, problem number 8 or 9. This is 8. So let me read one by one point and let me finish here. So subdivision, first you should need to cancel the existing equity share capital. So equity share capital account. So existing face value how much? 100 rupees. 10 lakh. To equity share capital, face value now 10 rupees. Being 10,000 equity shares are converted into 1 lakh equity shares. Right now you have with you 1 lakh equity shares. 1 lakh into 10, which is nothing but 10 lakh. Fine. After subdivision, what happens, sir? After subdivision, each shareholder shall surrender to the company 50% of his holding. for the purpose of reissue to debenture holders and trade payables as necessary. So we are utilizing the share surrender whenever there is requirement. Now 50% of holding means equity share capital face value 10 to share surrender account. To share surrender account. 50% means only 5 lakh. Am I right? Next. Out of share surrender, 10,000 shares of 10 each, that is 1 lakh, shall be converted into 12% preference shares of rupees 10 each fully paid up. Now in share surrender, which type of shares we have? Equity shares. Now out of the 5 lakhs worth of equity shares, to the extent of 1 lakh, we are converting in the form of preference shares. Sir, for such thing, no need to write any journal entry. You know why? For example, if you want to try to write, concentrate all of you, what entries you may write? The first entry is, first you should need to cancel the share surrender account at R. To which percentage preference share capital? It is 12% preference share capital. Cancel the share surrender. So convert into 12% preference share capital. That is 5 lakh, 5 lakh. After this, again, the 12% preference share capital, which you converted, you are utilizing to repay amount to that particular party. That means again, you should need to put it under share surrender. Now, which entry you write? 12% preference share capital to share surrender account. You may write 1 lakh. No, sorry. 1 lakh, 1 lakh. Sir, what happened with this, sir? Share surrender debit, share surrender credit. 12% preference share capital credit, 12% preference share capital debit. Now, simply how you can presume on behalf of writing these two entries. Now, for the existing shareholder, out of 5 lakhs, 1 lakh is preference share capital, remaining 5 lakh is equity share capital. If you presume like that, then it is more than enough. But if you want to write the entries, you can write cancel share surrender for 1 lakh, issue 12% preference share capital, that is convert. Then again 12% preference share capital, you should need to make it transfer to share surrender account. That's why impact is nil. So you can presume that out of this 5 lakhs, to the extent of 1 lakh is preference, to the extent of 4 lakhs is equity. Next, come down. The claims of the debenture holders shall be reduced by 75%. First of all, what is this claims of the debenture holders? Let us have a look. Claims of debenture holders. Go up. Here 12% debentures is 2 lakhs. Accrued interest on such debenture holders 24,000. Both are related to claims of debentures. He is not talking about debenture capital. He is talking about claims of the debenture holders. Now claims related to debenture holders is 2 lakhs plus 24,000. 2 lakhs plus 24,000. That is 2 lakh in the form of capital, 24,000 in the form of interest. Now out of the claims of the debenture holder shall be reduced by 75%. In consideration, in return of the reduction, they are ready to reduce to the extent of 75%, provided in return they are expecting the debenture holder shall receive preference shares of rupees 1 lakh which were converted out of share surrendered. Now, please all of you concentrate here. First 75% let me take here. 25% let me take here. 75% means 2 lakhs into 75%, which is 1,50,000 worth of debenture capital, and interest 24,000 into 75% means 18,000. That is total 1,68,000. Now the remaining 25% means 25,000 worth of capital and 6,000 worth of interest. Now what he is talking, first he is talking something related to 75%. Now this entire 1,68,000 ready to sacrifice by the debenture holders. So gross sacrifice is equal to 1,68,000. In consideration of this 1,68,000 sacrifice, the debenture holder shall expect the preference shares of 1 lakh. Now they are expecting 12% preference shares out of share surrender. Now in the share surrender to the extent of 1 lakh is preference shares, to the extent of 4 lakhs is equity shares, right? Now out of this 12% preference shares, out of this share surrender to the extent of 1 lakh worth of 12% preference shares they're expecting. This is the payment they are expecting in consideration. Means what is the net sacrifice? What is the net sacrifice? 1,68,000 minus 1 lakh, net sacrifice is equal to 68,000. Now concentrate guys, all of you. Whenever you are utilize share surrender, utilization of share surrender, what is the journal entry? Utilization of share surrender, the entry is share surrender account debtor to 12% preference share capital right now. So because in the share surrender to the extent of 1 lakh we have preference shares, for the remaining amount of 4 lakh we have equity shares. So just now I utilized the share surrender by passing the entry share surrender account debtor to 12% preference share capital 1 lakh. Now you are settling the party. So which party? Those are debenture holders. Out of such debenture holders, debenture capital, which debentures? Those are how much percentage debentures? 12% debentures. 12% debentures account debtor you are settling. How much? For 1 lakh. How much guys? Total 1,50,000 capital, 18,000 interest. So 1,50,000. Next, accrued interest. Accrued interest means here interest payable or outstanding interest or accrued interest, whatever the case may be. It is 18,000. You are settling, right? To settle this 1,68,000, how much amount you are utilizing the share surrender? To that extent, you should need to recognize the profit. For that, first you should need to transfer to reconstruction account, which was 1 lakh. To that extent of amount of utilization of share surrender, you should need to recognize as a profit 1 lakh. Now the net sacrifice really made by them, how much? 68,000. If it is net sacrifice, you should need to make it transfer to reconstruction account. So 1 lakh plus 68,000, total 1,68,000. So which is case number 3 they given. They are ready to sacrifice for 1,68,000. In return, they are expecting 1 lakh worth of preference shares. Those are issued out of share surrender. Now, if you check in the last case, what I told you in the last case, this is not related to problem number 8. In the last case, case number 3, out of 5 lakh worth of equity shares for the, out of 5 lakh worth of creditors, 3 lakh, we are issuing equity shares out of share surrender. And the remaining 2 lakhs out of sacrifice, 50,000, they are in return expecting equity shares we are issuing in the form of equity shares. Now you should only think about this 2 lakhs only. Now you can only think about this 2 lakhs. In this 2 lakhs, 50,000 we are issuing equity shares out of share surrender. And the real sacrifice is 1,50,000. For this 2 lakh, what will be the impact actually? Share surrender to equity share capital 50,000. And the creditors to reconstruction total 2 lakhs, because the real sacrifice is 1,50,000 for the utilization of share surrender 50,000. Only this case right now they applied for the debentures here. Now the debentures what they did, sir, 1,68,000 gross they are sacrificing. In return they are expecting 1 lakh worth of preference shares. Now I'm utilizing the share surrender for 1 lakh. For that purpose, share surrender to preference share capital is the entry. For the net sacrifice 68,000, for the purpose of amount utilized by the share surrender, total you should need to make it put under the reconstruction account at the time of settling. That's why 12% debentures, outstanding interest to reconstruction. Is it clear without any confusion? That's why my conclusion part I told you, at the time of utilization of share surrender to the related capital. And at the time of settlement to that particular party, how much amount you utilized for share surrender, you should need to put it under reconstruction. And whatever the real sacrifice there exists, such real sacrifice also you should need to put it under reconstruction. That is the point I mentioned. Clear guys? Is it clear? Almost 4 or 5 times I repeated the same thing. Sir, what about for this 25% is? This is 50,000. Okay. 50,000 plus 6,000. What is this 50 plus 6,000? If nothing is mentioned, then it is shown in the balance sheet after reconstruction. Okay, come down. trade payables claim shall be reduced to 50%. It is to be settled by the issue of equity shares of 10 each out of the share surrender. It is not in consideration. If you observe, it is not in consideration. Trade payables claim will be reduced to 50% means real sacrifice or the net sacrifice is 50%. It is to be settled means the remaining portion, the remaining 50%. How you know, sir? He is not using the word in return. He is not using the word in consideration. Just he is giving that it is to be settled by. It is to be settled by means for the remaining 50%. Now, come here. First, trade payables, how much given you can check. Trade payables was given at 72,000. Now straight away 50% is the sacrifice, which is the net sacrifice as well, which is 36,000. Now for the remaining 50% of 36,000, we are issuing equity shares out of share surrender. Now, first for the purpose of utilization of share surrender entry, share surrender account debtor 36,000 to equity share capital, which is 36,000. Now you are discharging your trade payables. You are discharging your trade payables account debtor to reconstruction. To the extent of amount utilized through share surrender, you should need to make it transfer to reconstruction. To the extent of real sacrifice made by the trade payables, also you should need to transfer to reconstruction. So 36 plus 36, 72. So you should need to cancel to the extent of 72. That's it. Any difficulty is there, guys? Nothing. Come down. Balance of profit and loss account is to be written off. The shares surrendered and not reissued shall be cancelled. Sir, if you check in share surrender, total how much balance we have? Where it is? Yeah, here. In share surrender total we have 5 lakhs initially we created. Out of 5 lakhs, I utilized 1 lakh here. I utilized 36,000 here. Out of 5 lakhs, I total utilized 1,36,000. Still, I have with me 5 lakh minus 1,36,000, which is 3,64,000 worth of balance is there in share surrender still. Now, this 3,64,000, you should need to make it transfer to which account? You should need to transfer to reconstruction. So, the balance in share surrender account debtor to reconstruction account is the entry 3,64,000. Is it okay, guys? Next, what he was given? Balance of P&L account to be written off. Now, before written off the P&L account, first all of you please cross verify how much balance is there under reconstruction account. First entry, nothing. Second entry, there is no reconstruction account involving. Here, nothing. Here, reconstruction account 1,68,000. Please, all of you put in your calculator. 1,68,000 is the reconstruction we have in that entry. Next, come down. Here, reconstruction we have 72,000 plus 72,000. Come down. Just now you transferred balance in share surrender to reconstruction 3,64,000 plus 3,64,000. So total I have 6,04,000 balance in reconstruction. Now, balance in reconstruction before making set off the P&L account was 6,04,000. What is the balance in P&L account? We have 6 lakh. Now you can record the entry reconstruction account debtor 6,04,000 to P&L 6 lakh to capital reserve 4,000. Whatever the balance remaining, you can make it transfer to capital reserve. Na? That's it. So you are required to show the journal entries giving effect to the above and the resultant balance sheet. Balance sheet is HW. I'll open my PDF. Please, all of you come. You can cross verify once again. Problem number 8. Yeah. This is problem number 8. So the first entry, equity share capital, 100 to equity share capital. This is for subdivision. Then out of the 10 lakhs, 5 lakhs, you are transferring to share surrender. Next, regarding the claims of debenture holder, you passed the entry share surrender to 12% preference share capital for utilization, and 12% debentures 1,50,000, 18 to reconstruction 1,68,000. And the trade payable, you are utilized only 36,000 for share surrender. So share surrender to equity share capital, entire cancel and put it under reconstruction 72. Then finally share surrender to reconstruction. What are the balance in share surrender? Then reconstruction out of 6,04,000, cancel 6,04,000, you transfer to capital reserve. That's it, guys. Any doubt in share surrender concept? Yeah, sir, can I merge entry of share surrender utilized for trade payables debenture? Yes, you can merge, but that will create a lot of confusion. Always it is recommended to write separately only. If you want, what one of my doubt he's asking, sir, share surrender to equity share capital, you wrote here 36,000, right? Here you wrote share surrender to 12% preference share capital for 1 lakh, you wrote, right? Now, can I write share surrender account 1,36,000 to 12% preference share capital 1 lakh to equity share capital 36,000? Absolutely, no one will object you. Okay, you can go. Okay, right? Guys, let me know till now what I have discussed in the chapter amalgamation and reconstruction. Is it in understandable mode? Is it a confidence build up inside from you? Can you able to resolve any problems if you are making a proper practice? Am I right, guys? Fine. I can able to take up another problem, but I don't want to take up another problem. I will give that problem as HW. What that problem is? Please, all of you resolve problem number 6 as HW homework. Okay. I should discuss on RTP problem. I want to discuss that problem, but we are not having sufficient time. That problem is little bit different problem. So always the problems which were asked in the RTP are not straight away questions. So certain twists are there, certain suspense thrillers are there. They are confusing you. They are given the different issues. So that is the reason just I want to explain that problem. But anyway, I am unable to take up at this moment because I want to allocate certain time for mind maps. Till now, what we have discussed in both the chapters, I want to provide a mind map and I want to close the session. But literally, I'm telling you, if at all I have certain time in the next future classes, please all of you remember me. I will definitely take up problem number 10 for the discussion. Okay. But I gave one HW. Please all of you resolve it. It will help you out to increase your confidence. Now, please concentrate, guys. Last 10 minutes of the class, which is mind map. Sir, this mind map is related to amalgamation first. First, this mind map is related to amalgamation. Sir, in the chapter amalgamation, what we learned, sir? In the chapter amalgamation, first we seen what is the meaning of reconstruction. Sir, reconstruction is nothing but restructuring of the existing financial statements. So because the existing financial statements are not depicting true picture, then we should need to go for reconstruction. We've seen two different types of reconstruction. One is external reconstruction, another one is internal reconstruction. In case of external reconstruction, a new company is incorporated. But in case of internal reconstruction, the same company continue its business activities. No new company, or simply no new company. Am I right? Sir, I told you for external reconstruction, the classic example is amalgamation in the nature of merger. Then after that, we've seen three different concepts. That is, what is the meaning of amalgamation? What is the meaning of absorption? What is the meaning of external reconstruction? Amalgamation means two or more companies liquidate and a new company is going to form, which is known as amalgamation. In case of absorption, an existing company will take over another existing company, which is known as absorption. In case of external reconstruction, a new company is incorporated to take over the existing company. Now, out of this amalgamation and absorption, the objectives may be to get the synergy benefit, to get the economies of scale, to enjoy the economies of scale, to enjoy the taxation benefits, to avoid the competition. But the objective of external reconstruction is showing the books at true and fair view manner. You know that. But whatever the objective is, whether it is amalgamation, absorption, or external reconstruction, there are only two different types of companies are there. One is selling company, another one is purchasing company. That's why we combinedly discussed all these three concepts. That is the reason why in certain problems we've seen pure amalgamation. In some problems we've seen absorption. In some problems we've seen the external reconstruction. But we doesn't differentiate anything. In some problems, two companies liquidated, one new company formed. In some problem, one existing company ready to take over another existing company. In the other problem, a new company is incorporated to take over one existing company. Do you understand? Next, after that, we discussed our major time on PC calculation and the PC. What is the meaning of purchase consideration, sir? Now, I'm coming to the pure amalgamation. In pure amalgamation, actually three different concepts we discussed. One is PC, another one is accounting treatment in the books of selling company, accounting treatment in the books of purchasing company. As per AS 14, PC is nothing but amount payable to the shares of the selling company. Sir, whom we are paying is relevant. What we are paying is irrelevant. You may issue equity shares, you may issue preference shares, you may issue debentures, you may issue cash. And we also seen various methods of PC. Under various methods, we see lump sum method, net payments method, net asset value method, intrinsic value method. Lump sum method means the fixed amount of the ad hoc consideration directly given in the problem. Net payments means amount payable to preference shareholders, amount payable to equity shareholders. If you make it total, then you will get PC under net payments method. Under NAV method means asset taken over at the rate of agreed value, less liabilities taken over at the rate of agreed value. If you can work out, then you will get NAV, which is equal to the PC in case of NAV method. Next, in case of intrinsic value method, how to calculate the purchase consideration? PC is equal to intrinsic value per share in selling company multiplied with the number of equity shares in the selling company. Then you get PC under intrinsic value method. And one more important thing also we've seen, sir, we can record the PC at issue price, or we can record the PC at par value. If you are recording PC at issue price, if you can follow, that is more than enough. But if you want to record PC at par value, first you should need to know the number of shares issued as PC, then multiplied with the par value. For the knowing number of shares issued as PC, you should need to do one thing, that is total PC divided by issue price. You should need to check. That is important. And one more thing, in problems we've seen, sir, while calculating PC, multiple methods also we can use in a single problem. Multiple methods means for knowing payment to preference shareholders, you may apply NAV. For knowing payment to equity shareholders, you may apply what you can call intrinsic value method. Yes, ultimately, what is the method of PC, sir? The method of PC is net payments method only. Because if you are ascertaining payment payable to preference shareholders, if you can able to ascertain payment payable to equity shareholders, the method of PC is always net payments. Like that also we've seen some of the questions. Then after discussing concept related to PC, we extended our arms for accounting treatment in the books of selling company. Sir, accounting treatment in the books of selling company AS 14 doesn't applicable. Generally accepted accounting principles are only applicable. That with respect to closure of the company, we should need to apply. Here, 5-step approach we learn. Step number 1, dismantling of balance sheet. In case of dismantling of balance sheet, what are all the different assets and liabilities which are taken over by the purchasing company should be closed and transferred to realization account at book values. Those assets or liabilities which are not taken over by the purchasing company separately opened to get some realizations in the outside market. Sir, equity share capital, reserves and surplus, miscellaneous expenditure not written off, any other fixed assets simply transferred to equity shareholder account, preference share capital transferred to preference shareholders account. Then dismantling of balance sheet is over. Then you can go for step number 2, which is PC due. The journal entry is purchasing company account to realization account at the rate of purchase consideration. So before providing step number 2, first you should need to calculate PC in working note. Then you can easily complete step number 2. Then after PC due, then you should need to receive the PC, which is PC receipt. You may receive in the form of equity shares, preference shares, cash, debentures. That's why equity shares of purchasing company, preference shares of purchasing company, debentures of purchasing company, cash to purchasing company you should need to cancel. Then come to step number 4, which is distribution of PC. So PC distribution should need to be made in the particular order along with the existing resource as well. Why I'm talking the existing resource? If any particular asset is not taken over by the purchasing company, you should need to realize in that particular situation. If you derived any profit or loss through the realization in the outside market, that profit or loss also you should need to transfer to realization. Then after taking existing resource as well as PC, first you should need to make payment for realization expenses, then secured creditors, then unsecured creditors, then preference shareholders, then finally equity shareholders. But up to before distribution of amount to equity shareholders, whatever the profit or loss again you are getting at the time of settlement, you should need to make it transfer to realization account. And before make it transfer amount to the equity shareholders, first you should need to find out the realization profit or loss. Such realization profit or loss you should need to make it transfer to equity shareholders account. Then step number 5 is final settlement to equity shareholders. Whatever the balance with the liquidators, such balance you can just distribute it among the equity shareholders account. Then automatically that particular account got closed and equity shareholders account also closed. This is the 5-step approach we've seen in the books of selling company. Then coming to purchasing company books, it all depending upon the type of amalgamation. Sir, if it is amalgamation in the nature of purchase, then you should need to adopt the purchase method. If it is in the nature of amalgamation in the nature of merger, then you should need to adopt the pooling of interest method. The difference between purchase method and pooling of interest method is, in case of purchase method, reserves and surplus of selling company will not become the reserves and surplus of purchasing company. But in case of the pooling of interest method, reserves and surplus of selling company will become the reserves and surplus of purchasing company. That point you should need to put in your mind. There are so many other differences are also there. Sir, in case of merger, all assets and liabilities taken over, at book values only. PC should be paid in the form of fully paid up equity shares. At least shareholders holding 90% of share capital in the selling company would become the shareholders of the purchasing company. After amalgamation, the purchasing company should need to continue the same line of business. If any of the condition is deviated, then we can call it as a purchase method. What are the different entries we've seen in case of purchase method? The first entry, business purchase to liquidator of selling company at the rate of PC. Now, business purchase means you should need to incorporate all assets taken over at the rate of agreed values to liabilities taken over at the rate of agreed value, which is nothing but NAV. Now you should need to cancel the business purchase, which is with PC. Now you should need to compare the PC with NAV. Sir, if the PC is greater than NAV, then you should need to incorporate the goodwill here. Sir, if the PC is less than the NAV, you should need to incorporate the capital reserve here. That point also we discussed. Then finally, you can go for the liquidator settlement, liquidator to share capital, securities premium, preference share capital, debentures, cash, whatever the case may be. And one more thing, under the liabilities, if you taken the debentures of the selling company, you should need to cancel the debentures of selling company. You should need to issue your own company debentures. If these debentures are issued with premium to securities premium, if these debentures are issued at discount, then discount on debentures also you should need to work out. Then if it's the same case in case of pooling of interest method, then what you should need to do, you should need to pass the first entry as usual, business purchase to liquidator of selling company. In the second entry, at the time of comparing PC with NAV, you should need to compare PC with share capital of the selling company, because all the reserves and surplus of the selling company would become the reserves and surplus of the purchasing company here. Sir, if PC is greater than the share capital of the selling company, which loss can be read as revenue loss? The revenue loss you should need to set off with the free reserves of the purchasing company after taken over of reserves and surplus of the selling company. No, sir, if the situation is PC less than share capital, then you can treat it as a capital profit only, which is transferred to the capital reserve. So the logic I told you, if you are treating it as a revenue profits, then such profits are available for distribution of dividend. We should not make it available for distribution of dividend, because which was arised only at the time of amalgamations only. That's why we are making transfer to the capital reserve only. Then remaining all are line by line addition. For liquidator of selling company to equity share capital, preference share capital, debentures in the as usual manner, you should need to pass this entry. Sir, one important variation is if statutory reserves of the selling company should need to be maintained by the purchasing company. In case of amalgamation in the nature of purchase, then you should need to pass one entry, statutory reserve to, amalgamation adjustment to statutory reserve is the entry. Now, till the time period, you should need to show the statutory reserves under reserves and surplus. Amalgamation adjustment account, you should need to show as a negative figure in the balance sheet. Once the time period over, then you should need to cancel the statutory reserve as well as amalgamation adjustment account. But if it is the pooling of interest method, if no need to maintain the amalgamation adjustment account. The reason is not only the statutory reserve, all the reserves and surplus of the selling company would become the reserves and surplus of the purchasing company after taken over. That's why no amalgamation adjustment account coming here. Sir, certain important certain important adjustment we've seen in the books of purchasing company. What are certain important adjustment? Such important adjustment are, one is intercompany owings we've seen. Sir, in intercompany owings, what we discussed, sir, always you should need to cancel the trade payable or the loan payable or whatever the case may be. It is bills payable. Trade payable means it includes bills payable only. 2, trade receivable or loan receivable or the bills receivable. Simply creditors to debtors is the entry to cancel the intercompany owings. Then for creation of stock reserve, what will be the entry? Goodwill account debtor to stock reserve account is the entry. We already seen. What else? So something we discussed about the accounting treatment of liquidation expenses in 3 different situations. The one situation is liquidation expenses paid and paid by selling company. Liquidation expenses initially paid by selling company, later on reimbursed by purchasing company. Sir, paid and paid by the purchasing company. Now, if is the case in the books of the selling company, what is the treatment, guys? Realization to cash. Sir, paid and paid by the selling company means in the books of purchasing company, no entry. Sir, paid by the selling company and reimbursed by the purchasing company means in the books of selling company, first it will expect money from the purchasing company, that is purchasing company to cash. Later on at the time of receipt, cash to purchasing company. That's why both will nullify to each other. No need to write. Then in the books of purchasing company, entry is goodwill to cash. Next, paid and paid by the purchasing company. In the books of selling company, no entry because it is not at all relevant for the selling company. All amount is paid by the purchasing company. Then in the books of purchasing company, same entry we are continuing, goodwill to cash. This thing also I explained. This is all related to amalgamation mind map, guys. So at least if you can able to recollect before going to examination, it is more than enough. Guys, please all of you hold for 3 more minutes. It will be over, which is the mind map for internal reconstruction. Please all of you hold, which is mind map for internal reconstruction. Sir, in internal reconstruction, what we discussed, sir, majorly. Sir, in internal reconstruction is going to happen either through alteration of share capital or through a variation in shareholders' rights or through reduction of capital or through compromise and arrangement or through surrender of shares. Now it is happened through alteration of share capital. So in alteration of share capital, there may be a subdivision or consolidation. There may be a conversion of share into the stock or stock into the share, vice versa, or increase of authorized share capital. But due to all these 3 issues, reconstruction account doesn't coming into the picture because there is no sacrifice made by the shareholders here. In case of variation of shareholders right, the variation may be with respect to dividend, the variation may be with respect to voting right. Here also there is no real sacrifice, but the dividend rights or the voting rights may be changed. That sacrifice is there, but that sacrifice doesn't impact the current situation. That's why no need to transfer any amount to the reconstruction. But coming to reduction of share capital, we've seen 3 different situations. Sir, Now, reduction through conversion of partly paid up shares into fully paid up shares. So reduction through payment of certain paid up value. So reduction to sacrifice made by the shareholders. Sir, here conversion of partly paid up shares into fully paid up equity shares means just you are changing the face value, you are not changing the paid up value. That's why again there is no real sacrifice. Simply equity share capital old face value to equity share capital new face value. Over. Now through payment means equity share capital to bank. Certain amount automatically cancelled, the remaining balance is showing in the balance sheet. Now sacrifice made by the shareholder or there is a reduction in paid up capital is happen in two ways. That is reduction in face value and paid up value, reduction in paid, that is reduction in paid up value but not face value. Now let us assume the face value of the share is 10 rupees, sacrifice was 2 rupees. Now here the entry equity share capital 10 rupees to equity share capital now 8 rupees to reconstruction 2 rupees. If this is the situation, what you will do, equity share capital to reconstruction 2 rupees you may write. That is the difference. Always we can presume that if nothing is given, there is a reduction in face value as well as paid up value. Till now, what are the problems we done in the internal reconstruction? The same thing is followed for the entire chapter. Next, regarding the compromise and arrangement, various compounding activities is occurring with the debenture holders or the creditors or the bank loan holders or either with the shareholders. To the extent of the amount sacrificed by that particular party, we should need to transfer to reconstruction account. Remaining as usual, as per the settlement, you should need to pass the entry. Just now share surrender concept we explained. In share surrender, you should need to think only three things. Sir, at the time of creation of share surrender, the entry is share surrender to share capital. At the time of utilization, these two are related to at the time of utilization. So at the time of utilization, the entry is share surrender to share capital. And at the same time, you should need to recognize the profit by cancelling the existing party, that is creditor or the debentures, whatever the case may be, to reconstruction. To reconstruction. Sir, what about the other sacrifices, sir? That is same. Sir, if something is made as a real sacrifice by the other party, that is creditor to reconstruction. For that part and share surrender, there is no link. That is same as usual only. If any amount is really sacrificed by the party, creditor to reconstruction is the entry. Debentures to reconstruction is the entry. That entry you should need to club with this part. That's it. Finally, if any balance is there under share surrender, then you should need to make it transfer to reconstruction account. That part also I discussed. That's it, guys. This is all about internal reconstruction as well as amalgamation. So from the next lecture onwards, let me try to start with a new chapter. If at all in between time permits, as I told you, I'll discuss the RTP problem which I missed in the internal reconstruction. I gave the HW, please all of you resolve. Until the next class, bye bye. See you.